First things first, what we're going to do is go over what happened in the markets today, because we are seeing huge volatility. We saw stocks sold off today. We saw a lot of assets go down. There's a lot of new signals that we need to cover. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, okay, I'll pull it up here. Look at this. Wall Street rattled by job loss woes as AI winners sink. So let's get into the market wrap. Not a rap battle, that is, the market wrap-up. Volatility lashed Wall Street with strong evidence of a cooling labor market, pushing high valuation tech stocks and crypto to big losses, while bonds rallied on bets the Federal Reserve will cut rates. And I'll get into later into the stream why, yes, I think the Federal Reserve is going to cut in December, even though Jerome Powell said, no, look, there's not going to be any cuts. We all know they're going to take the easy option, cut and print big. So it says here, equity sold off for the second time in 3 days, and the 10 years tumbled the most in about a month following Challenger Gray and Christmas Inc. data showing the largest job cuts in more than 20 years. And I did a video on that earlier in the day. If you haven't seen it, it's on the channel already. The NASDAQ 100 slumped 1.9% and a closely watched volatility index briefly topped 20. So we can see the market is now shifting. It's going from this euphoric bull market, and people are now all of a sudden starting to switch on, going, okay, yes, AI is going to probably change the world. Yes, it's going to make companies a lot more profitable, but it doesn't mean you just pay whatever price. This happens every single time there's a new technology. It happened with the railroads. It happened with, manufacturing. It happened with the internet. And, it's called irrational exuberance. So while bets on Fed easing have powered the bull market alongside the artificial intelligence boom, concerns over valuations have surfaced. Technical indicators are flagging reasons for caution, while worries about a narrowing cohort of stocks are driving gains have become louder. So exactly, you don't have to be a great technical analysis expert to see that the stock market right now is severely overvalued. We can see the Warren Buffett indicator is now over 200%, meaning GDP compared to how much the stock market is worth is now over 200%. The GDP is around 30 trillion and the stock market's over 60 trillion now. Now, if anything, the slide in equities appears to be taking some froth out of the market, which is definitely healthy. So risk off again. It goes to show it's not always about rate cut bets, and reality is starting to bite. Frankly, the market needed this reality check after months of AI-fueled exuberance. Traders are rediscovering that fundamentals still matter. That's exactly right. Every time... Oh, sorry, guys. Are you saying the volume's bad? I've got the volume up as loud as I can go here. Let me know, everyone else, if you guys... Or if that's just you, Leroy, because I did a mic check at the start and everyone was saying it's good. Sounds okay here? Maybe check your volume, Leroy. So yes, that's what's right. All the indicators are saying we're severely overvalued. Okay, so now let's get into more comments. So Fed Bank of Cleveland President Heth Hemmick said inflation is a bigger risk than job weakness. A lack of inflation data during the shutdown makes him uneasy about rate cuts, and Governor Michael Barr said officials still have work to do on inflation and must ensure the labor market is solid. Well, yes, this is the big problem, everyone. We still have high inflation, but the economy is weakening. And what this is called is stagflation. And exactly like what many of you in the chat spoke about earlier, this is what happened in 1971. This is when you still have high inflation, but the economy weakens. And it's absolutely nothing that the central bank can do about it besides just letting the market reset, letting things crash that should not be at that valuation, and letting the market find fair value. So the S&P 500 fell 1.1%, and Nvidia Corp and Tesla led losses in the mega caps. This is what I was warning about last week. This rally's all been in these top few Magnificent 7 tech stocks. Once they drop, the whole index will come down with them because they take up a huge weight of the S&P 500, over 30%. And a lot of the stocks in the S&P 500 are actually down. It's only because Nvidia, which is now the largest company in the US, has been on such a huge rally. So it says here, the yield on the 10-year Treasury slid 7 basis points to 4.09%, and money markets are now implying a better than 60% chance of a Fed cut next month. The dollar gauge dropped 0.3%, and Bitcoin sank about 3%. And for those who are asking before, yes, I do think we're pretty much at the top for Bitcoin for this cycle, the 4-year cycle. This bull market has now been over 30 months. Normally that's followed by an 18-month bear market. And this is someone that likes Bitcoin. I'm not just a Bitcoin perma bear. I was telling people to go ahead and buy it around 30, 40,000, and they've already made big gains. Now, if you're a long-term investor, there's no need to panic and sell. You can just write it out. But for those that can't afford to lose money, I won't tell you what to do. I can't give you financial advice, but you definitely want to think about that. Now we can see the chart here, stocks extend slide from all-time high, and we can see a reversal. Pretty much it was straight up, and then we're seeing this decline here. Okay, Jay Custom Parts. Wow, I haven't seen you in a long time, mate. Thanks for that super chat, $50. Very generous of you. Thank you, and hope you continue to enjoy the content. But continuing, it says, they say, we're sticking to our view that the Fed will deliver a follow-up 25 basis point cut in December because restrictive Fed policy can worsen the already fragile employment backdrop. That's right. But again, they're going to cut, they're going to print, and we're going to see more and more inflation and devaluation of your dollar. With the scarcity of data caused by the US government shutdown, investors have turned to private figures for the latest readings. And that's where we got the report where there was 153,000 job cuts last month. Now, against a backdrop of a low, higher labor market, this bout of corporate job cutting does represent a bigger labor market risk than the 2022 tech layoffs, when these workers were quickly scooped up by other industries. So that's right. After COVID, there was huge amounts of layoffs. Then people were struggling to find workers. And so then when all these tech people were laid off in 2022, there was still lots of demand for workers, so they were able to find other work. Well, now people are finding it very, very hard after the layoff to find another job. And we can see in this chart here, look at this. This is shocking. I'll go ahead and move myself here. Layoffs for any October hit the highest since 2003. So we can see we haven't seen numbers like this in decades. This is what happened before the dot-com crash and the recession in the 2000s. And look here, this is 2008 here, and look where we are today. Worse than 2008. And this is because we have multiple factors happening at once. It says here, while some FOMC members have been hesitant to commit to another Fed funds rate cut at the December meeting, a wobbling labor market will likely force their hand, which I think it definitely will. And we can see when this news came out, the Treasury for the 2-year sank on bets the Fed will cut. And I'll go over the 10 and 2-year Treasury yield curve in a moment. So what do you guys think about this that's happening in the markets? I'll go ahead and read some of the chats here, and then we'll go into our next story. So volume's fine, good. Okay, Alan Greenspan, Satoshi. Does job cuts have anything to do with people Trump is letting go? Well, I'm not sure exactly what you mean by Trump letting go, but yes, a government shutdown will be affecting jobs, because if those people aren't spending, a lot of these companies that are normally high for the Christmas season, if they're not getting people buying goods, well, then they'll have to let them go. Travis, live on a boat, debt-free, with my bullion, preparing for the worst. Wow, that sounds pretty good there, Travis. Sounds like you're living the good life. DM for VX until it sinks. Yes, that's right. So yes, the markets are looking very shaky. I think the markets see that, look, this run has been great, but now things are getting crazy. But again, this all depends on what the Federal Reserve says, because a lot of people say, look, Michael, you're saying the markets are going to crash. Yes, that is if there's no artificial intervention. But what we've seen time and time again, governments and central banks have gone from, before, what was normal, what was healthy, was to let markets crash, let them correct. But now they've gone from that kind of beliefs to now all of a sudden wanting a permanent bull market, wanting things to just go up and up and up and never have any slight corrections at all. So it all depends on what the Fed does. And again, like I always say, if they do start printing massive amounts of money and cutting interest rates, we won't have the stock market crash in dollar terms, but we will have people's standard of living continue to go down. And why do you think housing is so unaffordable compared to 20 years ago? The cost of living is so bad compared to 20 years ago, even though markets have roared. It's because of all this central bank money printing. So I'll go ahead and read this here. When the shift, people use cash until it runs out. Gold, no one will have cash to exchange it. Silver, the pleb's choice, get junk silver. You'll be able to buy eggs and bread with it. Yes, you also want some food too, because if people have got gold and silver, but got no food, well, then that's going to be an issue. But I'm sure you're handling that fine. All right, let's get into our next story, following up what we were talking about yesterday. What's happening in New York City? Jamie Dimon, the CEO of JP Morgan, has come out and spoke about the exodus will be happening to New York. And we have to watch this because New York is a financial hub of the United States. If they go down, it will have ripple effects across the whole economy. And then we'll also go over Mandani completely flipping on his voters just hours later. After getting elected, now his true colors have been shown, which I'll get into a clip of that from himself in a moment. So I'll go ahead and bring this up here. Let's react to this. Give my voice a bit of a rest.
I'm going to shift on you a little bit. So there's been a historic relocation.
Also, let me know if the volume's loud enough for the audio from this clip, and I'll mute my mic so there's no echo.
Of both people and capital to Florida and to South Florida, primarily from the west coast of the country, the Northeast, Illinois, DC, you name it. And what are your thoughts on that? Is that going to continue? And for the residents of Wall Street South, how should we think about the future relative to that relocation that's taking place?
Yeah, my bottom line is I think that everyone has to compete. And when I grew up in New York City, I was probably one of those New York City kids that thought that it's New York City, New Jersey, and the rest of the world, something like that. And you know why New Yorkers are so depressed?
Why?
Because the light at the end of the tunnel is New Jersey. But now, and when I first started traveling the world, a lot of cities weren't great places, including like London, or Singapore, or Hong Kong, or Nashville, or now they're great. I mean, all these cities, they've got opera.
I don't know about London, guys. What do you think about London? Do you think it's great now? I think it's in rapid decline, just like New York, and a lot of other major Western cities in Europe are in decline as well.
And food and infrastructure and terrific universities, and it's a competitive world. It's competitive between countries, it's competitive between cities, it's competitive between states, and you're mentioning a bunch of these states that are driving business out, and it will backfire. And so people vote with their feet, and some people act like they vote with their feet because they're selfish. They vote with their feet because they see a better life for them and their family. I'm not mad at someone if they leave JP Morgan because they say they got a better opportunity. I'm like, I understand. It's your life. I want you to be happy. It's not about you making me happy. And so there's a competitive element to all these things. And like even COVID taught you that.
Yeah, so it's definitely true there. There's a lot of people, they just simply are going to go to the city that treats them best. And what's different now is the world's a lot more mobile. People can work remotely. So if, for example, New York starts taxing people more and more, which there's going to be even more taxes announced by Mandani's government, with the new elected mayor of New York, people are just simply going to leave, or they can go to another state and they may be able to work remotely. And I'm not for, no taxes and all that stuff. People do need to pay their fair share of taxes. But really what it comes to, do people see the benefits? Do they see their tax dollars actually being spent well? And do they see benefits from the taxes? I think people are more than happy to pay taxes if they see that there's good public transport, the streets are clean, the streets are safe, there's good schools, good education, good quality of living, good healthcare. people are happy to pay taxes. But what we're seeing in these major cities is they're asking for more and more taxes, and the services are getting worse and worse. So people are saying, where's all our tax money going? A lot of these states that have the highest taxes, the standard of living in those cities are actually getting much, much worse. So it shows there's huge amounts of corruption and there's huge amounts of mismanagement of the funds. Again, you could tax people 100% of their income, but if all that money, if they spend 110% of that, there's always going to be a deficit. If they always waste money on programs that don't really benefit the people, or there's just blatant corruption, well, it doesn't matter how much you tax people. And this is what we're going to continue to see. We're going to see people leave these cities and go where they're treated best.
You can work, a lot of people can work in different cities and be quite productive. And, we have big technology centers around the world, including Buenos Aires, because they've got a great university, on coding and engineering in Argentina. And so Miami and Florida compete. They compete with taxes, they compete with universities, we have more employees in Texas today than we have in New York. If you go to Texas, you want to build something, you build it. The taxes per personal and individual lower. They've got their universities make sure they're graduating the students you want. And if you need to change a bus route because you have 5,000 employees somewhere, they just change the route. You go to other cities, you'll be negotiating for 20 years. And I think they're making a mistake. And a lot of those cities do things in the name of good, which create bad. All of these bad policies, in my view, usually hurt the lower paid people more. That's what happens. And they also don't acknowledge their problems. So I think like in inner cities, we do a lot of work in inner cities in the United States, in the schools. But the first thing is, raise your hand and say we aren't graduating kids with the skills they need to have a well-paying job. So I give you skills, 16 weeks, advanced manufacturing, or taking care of a car, taking care of a Cessna.
That's exactly right. I think with a lot of these high schools, they need to be giving people practical skills so they can go and get a trade, or they can learn, before, I was learning to code, but now AI is taking those jobs. But they need to have more targeted courses, more targeted education to get jobs out there in the real world. And the thing that's happening now is technology is changing so fast. By the time, a new technology gets put in the school system, they do all the manuals, they do all the books, they create all their programs, it's already changed. The market's already moved. So you cannot rely, you need to get your kids to learn to be able to teach themselves, learn online. They can't just rely on the school system to teach everything because it's getting massively outdated.
The coding, compliance, something like that, $60,000 a year job at 17 with full medical. We're not doing it. We're just simply not doing it. And then, and I'm not going to blame any particular group here, but if you don't stand forward and say, we have a problem, this isn't working, you won't fix it. So there's a lot to do. And, like going back to Miami, Florida's done a great job. And if you look at what's happening, South Carolina, North Carolina, Florida, Georgia are growing, California, Texas. Texas has just started a new stock exchange. I don't know if it's going to work, but
and that's going to be huge to see how Texas Stock Exchange competes with New York. But they continue to see, a lot of these policies put in, a lot of these Wall Street bankers are going to leave.
It's going to probably be bad for ISS and Glass Lewis, and I think that's great. I think those institutions are terrible and should be crushed, and so the domicile of corporations, the litigation system we have to deal with. We better start fixing these things, because if we don't, folks, in 30 years, we're going the way of Europe. And, and we have to open our eyes and make sure we're quite clear. And if we do it right, it'll help all of our citizens.
Yeah, that's exactly right. And that's quite scary that I see happening around a lot of global cities. They're getting very, very unsafe. There's mass illegal immigration. A lot of people get this debate with immigration confused. They think, everyone on the right, they don't want any immigration, or they're racist because they don't want any immigrants. No, it's just don't bring people here that are committing these terrible, terrible crimes, give people a chance, but if they muck up, send them back. It's just that simple. And actually do background checks on people who you let come into the country. And if people are here illegally, send them back. It's not that extreme, but, common sense has become extreme these days. So that's Jamie Dimon speaking about the decline of New York City. And yes, a lot of people were happy with Mamdani's policies. It sounds, on paper, it sounds very, very good. And some of them are decent policies. But we're now starting to see who's actually going to pay for it, his supporters. And this is crazy because you've got federal taxes, then you've got state income tax, you've got the city tax in New York, and now he wants to tax again. And again, it's not a tax problem, it's a spending problem. So let's watch this clip that's going quite viral right now. See, the volume's up.
Defined by transparency, because New Yorkers deserve a government they can trust.
Deserve a government they can trust. Any of you guys trust any government? I don't care if it's Democrat or Republican. I don't trust any of them.
On January 1st, I will be your mayor. New Year's Day and a new era for this city. Oh, and one more thing. Remember how I told you a few months ago to stop sending us money? You can start again. This transition...
What's that, Bernie? I am once again asking for your financial support.
Requires staff, research, and an infrastructure that can meet this moment.
Yeah,
and it will be made possible by the people who built and believe in this movement. So I hope you'll make a donation at transition2025.com. Now let's get to work.
So it's like, okay, guys, going to give you all this free stuff. But can you give me a donation first to pay for it? Again, this is why, I'm pretty burnt out from politics, and I don't really like the two-party system. I think there should be more choices, can't speak today, rather than two parties, because then that gives you the illusion that you have freedom to choose. But it's a lot easier to control just two parties rather than having, 5 or 6 parties where you can have more choice. I don't like, when people try to put you in a box saying you're from the left, you're from the right, so you believe this and you believe that. No, people have a broad spectrum of beliefs. But okay, let's get into this chart here, people. This is the 10-2 Treasury yield. And what this means is, normally when we see the 10-2 year yield invert and then rapidly steepen, this means a big recession is coming. Now, what happened in 2008 is the yield curve inverted in 2006, and there would have been a lot of people saying, okay, the yield curve's inverted, so a recession's coming. And then people in 2007, at the start of 2008, were like, what recession? There's nothing coming, the markets are booming. But we saw the recession really didn't peak until 2009 and 2010. Well, the yield curve inverted in 2023, and now the yield curve is steepening. But again, this always has a lag. So I think in 2026, I think right now we're already in a recession with the huge layoffs that are happening, but we're going to get official announcement that we're in a recession in 2026. So what do you guys think about this? And I'll get into more data on the economy in a moment. I'll read some of you guys' chats. The word government in Latin is for mind control. Bitter. Little grandma give you last $5. Yeah, exactly. It's not just legal immigration. It is also the legal immigration, which is probably worse. I don't know. For me, in my opinion, illegal immigration is much worse. What if people just voted on policy and politicians just enacted it? Wow, that would be a miracle. You're like the MMA guru for finance, and I'm here for it. Who's the MMA guru? I'm not sure who that is. Two wings of the same bird. That's exactly right. They're all going to work in their interest and their donor's interest. Called a realist moron. Surveillance state and waiting choices not looking good, really. That's exactly right. Kali, recession moving slowly towards Great Depression of the centuries. Well, what's very interesting is we're lining up to the 100-year cycle. We saw what happened with the Great Depression. There was a roaring 20s. What have we had after the pandemic, after the closures of the economy? We've had the roaring 20s. So I wonder what's going to happen next. Michelle putting the United Nations WEF puppets on full display. That's right. Eagle Cassier bubble is bound to go one of these days. Well, it's already kind of starting, but we'll have to see if the Federal Reserve can come in there and save the day again. But okay, let's get into our next story. And this is big. This is really going to have huge consequences for the economy. So these are the 40 airports that will reduce flights due to the shutdown. So we're starting to see massive amounts of airport flight disruptions. Let me know in the chat if you guys have had some flights disrupted, or know some family members that have had their flights disrupted down below. And let's dive deeper into this article. All right, so it says here, the world's busiest airport and 39 others across the United States were forced to decrease flights by 10% starting November 7th. So it's going to get worse if you haven't been affected already. The Federal Aviation Administration, FAA, announced a decision on November 4th as it struggles with personnel shortages due to the ongoing government shutdown. And those flight controllers who stay on continue who are staying on to continue to work without pay. He says, "We can't ignore it," FAA administrators Byron Bedford said at a press conference on November 4th. "If the pressures continue to build, even after we take these measures, we'll come back and take additional measures." So this government shutdown is already the longest in history, and this has been the worst or the most action it's had to take in the 35 years in the aviation industry. And it's just absolutely crazy that these politicians can, take people as economic hostages and use these people as bait to, get their political bills through. And again, I'm not just saying this is a Republican thing or a Democrat thing. They both use this tool, and it's the people who suffer from their massive egos and their policies. So I'll go ahead and bring up a chart here. We can see airports affected by the FAA restrictions. So we can see here Seattle, Los Angeles, San Diego, Phoenix, Denver. And it's just simply too much for me to list, but you guys can pause and have a look there if you like. So it says here, the list includes Hartsfield-Jackson International Airport in Atlanta, which is considered to be the busiest airport in the world. Memphis International Airport, which is a FedEx super hub and considered the second busiest cargo airport in the world, and global access points such as John F. Kennedy International Airport, Miami International Airport, and Los Angeles International Airport. So not only are people's flights being disrupted, but also a lot of stock that is moved around by FedEx, a lot of shipping that's going to be affected by this. And that's going to have a drag on the economy as well. Now it says here, these restrictions could end with government these restrictions would end with government shutdown, which has been ongoing for more than a month due to the inability of a continuing resolution bill to pass the Senate. Republicans currently hold a 53 to 47 majority in the Senate. However, 60 senators need to vote yes in order for the bill to move forward. Republican lawmakers continue to criticize Democrat lawmakers for continuing to vote no and failing to fund the government. Now, Duffy said, "I don't have access to pay money to air traffic controllers during this shutdown." So we've got multiple things happening here. We've got stock market falling, we've got mass layoffs, and now we've got the government shutdown, as well as AI causing layoffs. We've got multiple factors that are going to be affecting the economy here. So what do you guys think about that? And I'll read some of your chats again. So it says here, Mandani is a candidate the same way Barack Obama was. Yep. What does everyone think about the filibuster? I'm torn on the filibuster. It seems to be used for good at times, but recently it's just been abused. Yeah, it's definitely being abused at the moment. He said he's got a backup flight with 2 different carriers out of FT next week, just in case. Yeah, that's what I've heard. A lot of people having to book backup flights. Mandani may have high ambitions, but he also wasn't born in the States, so he can't be president. Wonder who the Democrats will endorse as president candidate. Wonder how things will turn out. Yeah, it'll be interesting to see what happens in 2028. Time for airports and airlines to suck up and pay ACT services. Very interesting. So, okay, Let's now get into our next story. One of the biggest lenders, one of the biggest banks that's been lending for this AI craze has just took a massive hit today, and that is SoftBank. So let's go ahead and dive into this. So look here, everyone. SoftBank shares slide over 8% amid renewed pressures on AI-linked stocks. And this is that bank that did the huge deal with Trump, with OpenAI, and with Oracle, announcing huge amounts of spending in the AI space. And now, if they over-leverage themselves, they're going to get burnt. So it says the group, which holds a wide range of AI investments across infrastructure, semiconductors, and application companies, saw shares drop more than 8%. And I bring up the chart here. We can see, look at this. What an absolute massive drop. So it shows that these investors seeing how leveraged SoftBank is getting with these AI companies, and they're very, very worried. The declines in Asia tech stocks also come after AI-related companies in the US fell overnight. So this is breaking news just from about an hour ago. So Qualcomm dropped almost 4% despite strong quarterly results after warning it would lose future Apple business. AMD, a strong performer Wednesday, slipped 7%, while Palantir and Oracle were down about 7% and 3% respectively. Nvidia and Meta platforms also finished lower. Again, these are the big stocks that have been making the stock market go up, but most of the other stocks are actually in the negative. So once these continue to drop, that's when we'll see the real drops in the market. Now, the excitement surrounding AI has raised worries that markets might be experiencing a tech bubble. Some experts argue that the valuations of AI companies are starting to resemble the dot-com bubble of the late 1990s, with stock prices rising well above realistic profit forecasts. And that's exactly right. Sam Altman was asked a very simple question: how does a company with $13 billion in revenue have spend commitments of 1.4 trillion? It's simply not going to happen, people. And this, again, always happens with technology, irrational exuberance. Even though the technology will change the world, it doesn't mean, you just pay 100 times earnings. And so that's what's happening with SoftBank. What do you guys think about that? You already saw something about Zion Bank as well. I can check. I think I did cover that recently. Yes, I saw that. It was a couple of weeks ago. I'll see if there's any more updates after this stream, and I might be able to do a video on it. Burry doing well. Yes, this came, just after Burry started shorting these stocks. So his short positions are definitely doing well today. When would a good time to buy be, do you guys think? Well, no one knows the perfect time to buy, and it depends what assets you're talking about. Nikkei crashing again in early trade? Yes. So SoftBank's on the Japanese stock market. Time to get your money out of the SoftBank? No problem. Okay. Well, now we're also going to react to our next story about the truth of AI and the mass layoffs that are happening. So let's go ahead and react to this clip from CNBC. And I'll go ahead and adjust. And just let me know if the audio is good for you guys when I play it.
Between January and September 2025, there have been more than 946,000 job cuts announced.
Wow, look at that, guys. If you don't think we're in a recession now, I don't know what other evidence I can show you.
With roughly 300,000 from the government sector.
That's the highest since 2020, and it's a 55% increase from what we saw last year through the same time period.
It would make sense to think AI is to blame for the layoffs.
Now that we've had generative AI come in and kind of change the equation, investors and boards are asking management teams, how are you using AI? Why aren't you using AI? Can't AI help you streamline costs?
But the latest round of layoff announcements in the fall of 2025 suggest AI might not be the root cause of the restructurings.
That's right, everyone. That's what I've been talking about. This is multiple factors. Yes, AI is doing it. But just like what happened when Bitcoin came out. I don't know if you guys remember in 2016 when Bitcoin was all the hype, and in 2020, companies, all they did was just added blockchain in their earnings call, or just added blockchain on their company and started putting in all these buzzwords because it makes your stock go up in the short term. This is what happened during the .com. They all of a sudden put .com, or they started saying they're doing something with the internet or creating websites during 2000. And just by saying that, their stock surged. But what's really leading to these layoffs is the economy's weakening. Again, we've got the government shut down, and we're going to have, a lot of these jobs being automated. Well, one person's income is another person's spending.
They also seem to be real signs that something new is happening, that we've turned a corner in the economy.
So we've seen a wide range of reasons. You're not really seeing companies say, I am cutting 10,000 employees and replacing them with one single computer.
Using AI and introducing it to save jobs turns out to be an enormously complicated and time-consuming exercise. I think there's still a perception that it's simple and easy and cheap to do, and it's really not.
There's no doubt AI is a powerful force in the economy right now. The extent to which we think it's affecting the economy and hiring is in graduate level, low-skilled jobs. We haven't been able to find yet much evidence that AI is capable at this moment of taking over sort of white-collar, middle management jobs.
So why are we?
Yeah, it's definitely true. AI can do some very, very basic things, but as soon as something doesn't work in the AI program, it completely falls apart. So you still do need humans at the moment. And a lot of the companies, they're jumping the gun and announcing these layoffs, and they're saying it's because of AI. So that way it doesn't show investors that, actually their company is actually doing very weak. But even if it's not doing weak, they're doing these cuts and saying AI to make their stock go up.
Are we seeing so many layoffs? And how much of it is because of AI? Wall Street has been hyping generative AI innovation for several years now, which is putting pressure on executives to make it a part of their business model. 79% of CEOs in the US said they feared they could lose their jobs within 2 years if they didn't deliver measurable AI-driven business gains.
So again, that's what's causing all the market irrational exuberance, because these CEOs are forced to do it to capitalize. Otherwise, they're going to lose their job.
Investors need to be a little careful with what some people have called AI washing. And what that is this idea that because business is deteriorating or there's some difficulty going on with the business, you say, oh, we're letting people go because of AI. No, you're letting people go because the business is hurting and calling it AI, and because Wall Street is buying anything with the letters A and I attached to it. And so what you might find is you would actually get a bump in your stock because you're letting people go because of AI.
There's this kind of financial fiduciary incentive for management teams to say they're using AI and say that strategies are related to AI, even if it's not totally related to AI. There's been surveys that have come out that found companies are attributing certain strategies and plans to AI.
Wow, look at that, guys. 35% of AI projects are just for show. And I think it's probably actually higher than that. We saw a lot of, again, during the .com bubble, a lot of these companies just put .com in there and they said we're doing stuff with the internet. But it was all just buzz, short term, to boost the stock price. Then the CEO and the shareholders, they sell their shares, or the insiders sell their shares at the top, and the retail investors get burnt.
AI, but it could be as simple as, using AI to write an email for you, right? Is that really a revolutionary use of this technology? No, but can you say you're using it as part of your strategy? Technically, yes.
We spend a lot of time looking carefully at companies that are actually trying to implement AI, and there's very little evidence that it cuts jobs anywhere near like the level that we're talking about. And in fact, most cases it doesn't cut headcount at all. It may come effectively later on by improving productivity, so you get some of the effects of it. But it turns out it's really, really hard to cut headcount with AI.
Even Meta's decision to cut 600 workers in October 2025, they cut those workers from their AI unit. And that's because the AI unit had gotten bloated. They'd hired.
Yeah, so look at that, guys. If AI is really, going to change the world next year, Meta would be hiring more people in the AI space not laying off 600 AI-related employees.
Hire too many people, and especially at these tech firms where the idea of integrating new technology, innovating and disrupting, you cannot have 10 people you have to go to make a decision if you want to be a disruptor and an innovator.
Companies are announcing big layoffs all the time. In a given year, there could be 1 million announced layoffs. The question is whether or not there's other hiring going on. And the problem we have is that there's no official hiring data.
We've seen a wide variety.
So look at this, the government, the shutdown means no jobs report. Here's what it would have said about the economy. So could this also be another reason why they're shutting down? Because they don't want to show how bad things really are. And that's very true. They can have, 1 million layoffs. The real problem is if those people that are just laid off can't find another job.
Variety of reasons for the layoffs that we've seen in recent months. Sometimes it's related to a larger restructuring at the company, an effort to reduce costs. Sometimes it's related to changes in the business. This is kind of a trend in corporate decision making where big corporations become really fat over time, right? You have all these layers of middle management, and it takes a long time for people to get things done, right? Corporate employees spend a lot of their times in meetings. They spend a lot of time talking about work, but not a lot of time actually doing work. As we enter into leaner economic times, you're seeing companies kind of rethink their corporate structures. Do I need 5 layers of management for one project to get done? If I cut out 3 to 4 of those, how quickly can we actually have this project out in front of customers? And when you're in a high interest rate environment, the job market has become weaker. Consumer spending has become weaker. You don't really have the luxury to have 5 layers of management to go through every time you make a decision.
I think in general, they just don't seem to worry about.
Yeah, so a lot of companies are trimming the fat at the moment. They're trimming the bloat.
The consequences of overcutting, nor do they worry about the consequences of what happens if they're guessing wrong about recession. So there's been some interesting research over the last couple of years showing the costs of doing that. And basically the short conclusion is the longer you can resist a layoff, the better your financial performance is likely to be. And part of that is because you don't save as much money by cutting as you think, but also on the rebound, it takes you a while to bring new people in, get them settled, not disrupt the place, and then turn things around.
There's a great story out there that maybe people want to tell about the coming revolution of AI wiping out all the jobs. Let's just be skeptical of that till we have a little harder evidence.
Yeah, that's exactly right, guys. A lot of people, they're putting out there that AI is going to replace your job in 2 years. It's all just hype. It's not going to happen anytime soon. It will probably happen, one day, maybe in 5-10 years. But right now, it is just hype. And again, AI may also hit a plateau because a lot of their data is being trained on the information that it has now. And a lot of these people saying that AI is going to get so much smarter than us. Well, it's definitely going to plateau once it's already trained on all the data that it has. And it'll be interesting how they do break through that plateau when we get there. And we've already got worries, with OpenAI, that's ChatGPT, the company that runs ChatGPT. There was a lot of drama put out today because their CFO was saying that the government should have a backstop or pretty much bail out the AI sector if things go bad. And only after there was huge backlash, she all of a sudden backtracked on her statements. But before I get into that, I'll quickly read some of you guys' chats here. All right, let's see. The helmet, at some point, don't companies need to focus on more than stocks and focus on things like company health and long-term performance, and government focus on Main Street? Yes, that's just common sense, but unfortunately, I don't see that happening anytime soon. TKS Adventure, easily possible. The market is conditioned for very low volatility. Have a long-term memory problem. Yep. Race car probably shouldn't be taking, putting a big amount of money in investments based on, a live chat on YouTube. Okay. Let's see what else you guys are saying. After all this unravels, which might take a while, feeble attempts to prop up the market, we have started considering the possible of a flatline economy instead of a V-shaped recovery, or stagflation. Philip, Yeah, you can always just replay the stream. You can watch it anytime, but we're still going to be going for a little while. Daniel, with respect, a lot of commentary about AI is coming from people that have little no experience with it, and as a result have little idea what it can do now or where it's going or how fast. Well, I'm sure there is technology that these companies have that it can do that they're not telling us yet. I'm pretty sure ChatGPT, they're just giving us the scraps. Then we see, the latest innovation was Sora, where they're making, just meme funny videos. That's what all this trillions of dollars of investment is going towards, to make silly videos. The helmet, the one thing AI seems to be pretty cool about is Google search. Yes, that is very handy, because it was annoying before when you try to Google search something and then you have to watch a 10-minute video to get an answer, or for example, you have to go through 10 different websites. So I'm not saying, AI is useless. It definitely has very, very good use cases, but for it to, replace all of corporate America in a couple of years, it's just not at that stage yet. And again, it doesn't mean you pay 100 times earnings for the stock. AI has been around a long time, and many things we encounter every day. This new trend is to sell stock, that is all. Sam Altman, a lot of outsourced customer service jobs in India will go fast. Yes, I'm sure that will happen. So it started with, offshoring, and then, for these very simple inquiries, it'll be done by AI. AI is brilliant but not infallible. Putting too much faith in it could result in problems we can't even anticipate. That's exactly right. What happens if, people say, for right now, if you use some of these chatbots like ChatGPT or Gemini, if it makes a mistake. But what happens with the entire generation that grows up on these AI chatbots? They think that chatbots that know everything, they can never make a mistake, and they say that, we have AGI now, artificial general intelligence, and then they say it's smarter than us, and people stop using their brain. Well, then how do they know if the AI is actually giving them the correct answer or not? Philip, what's hyperinflation going to do with the Australian economy and housing? Well, it depends. Are you talking about hyperinflation in America or Australia? Well, okay, let's get into this story now of the OpenAI CFO asking for this bailout and what's causing all this drama at the moment.
Governmental the ways governments can come to bear.
Meaning like a federal subsidy or something?
Meaning like just first of all, the backstop, the guarantee that allows the financing to happen. That can really drop the cost of the financing, but also increase the loan to value, so the amount of debt that you can take on top of an equity portion for
so some federal backstop for chip investment.
Exactly.
What do you guys think about that? Do you think there should be a government backstop to give these AI companies that are taking your jobs, give them money to bail them out if all of a sudden, they spend these trillions and trillions of dollars, and then all of a sudden some new technology comes out and they don't need all these chips, and then these AI companies go bust? I definitely don't think that should happen. But what do you guys think? Let us know in the chat.
And I think we're seeing that. I think the US government in particular has been incredibly forward-leaning, has really understood that AI is almost a national strategic asset, and that we really need to be thoughtful when we think about competition with, for example, China. Are we doing all the right things to grow our AI ecosystem as fast as possible?
Are you talking to the White
House? Again, you don't want to develop it as fast as possible. You want to be safe with it, and you also don't want to take on crazy amounts of leverage, because that's what creates massive market crashes like the .com.
White House about how to further formalize that kind of backstop?
We're always being brought in by the White House to give our point of view as an expert on what's happening in the sector, for sure.
Okay, now they did come out and backtrack on this. Sam Altman and also David Sachs came out and saying, no, they didn't mean that. But I'm sure she only probably said that after the huge amount of backlash. So it says here, I'll go ahead and adjust it here. Trump AI czar Sachs says no federal bailout for AI after OpenAI CFO's comments. So David Sachs says there'll be no federal bailout for artificial intelligence. and he is President Donald Trump's artificial intelligence and crypto czar. Sachs' comments came after OpenAI CFO Sarah Afrier mentioned a federal backstop during a conference. And so we can see here that their startup wants to establish an ecosystem of private equity, banks, and federal backstop or guarantee that would help company finance its infrastructure investments. She softened her stance later in LinkedIn post and said OpenAI is not seeking a government backstop for its infrastructure commitments. She said her use of the word backstop clouded her point. So yeah, we may give her the benefit of the doubt, but maybe, she was just testing the waters to see what the sentiment is like. And it's only now that she's getting this backstop now, they're like, okay, no, we didn't say that. But pretty much every major industry wants or has been given a government backstop. Like we saw with all the huge corporations during COVID. Did you know that they actually bailed out these corporations? They gave these loans with 0% interest for these huge corporations like Apple for them to get through the pandemic. For example, the Federal Reserve did something they're not normally allowed to do. Normally, they're only allowed to buy treasuries and mortgage-backed securities, but they actually started buying corporate bonds, corporate debt. So, for example, if Apple was going to go bust, they could just go, hey, Fed, we need some money. We'll sell you this corporate bond, and the Fed paid whatever price for it. Now, that is absolutely crazy, and this is why, like I always say, we don't have capitalism. It's not capitalism the problem for everything. It's we have socialism programs for these huge corporations. Corporate welfare is what there is in America. Normally what would happen in a free capitalistic market is, for example, if Apple ran out of money, they would go bust. Someone would come and innovate and create a better business for cheaper and would not use as much risk and would create better technology, and then they would come out ahead. But no, we have these few corporations that have mass control of the government. They're lobbying the government and they're creating almost monopolies, like who can, for example, in search compete with Google. Google dominates search at the moment. And this is an example with many other companies. And OpenAI is trying to dominate the AI space, but it still is very, very competitive at the moment. So what do you guys think about all this? I'll read a few more super chats. That would be awesome if they'd pay off our homes, but that's not the way our country works. Yeah, I don't think that will happen anytime soon. Is there any other stories that happened today that you guys would like me to cover, or any questions? Just let me know. Okay, his huge lake cabin would be nice. Yes, that would be nice. Racecar said he had to play with some of those AI music maker tools yesterday. It's so depressing. Yes, if you're an artistic person, it can be depressing, and it's also they're using these artists' music to replace them. It's not because AI is so smart and creating this organically. It's just stealing these artists' data. Have you seen news about banks that loan money to these data centers companies and are not hedging positions on these stocks? Yes, that's what I went over earlier in the stream, where we saw SoftBank shares slid over 8%. Someone said CarMax. Yes, I did see, I think it was George Gammon did a video on CarMax today, and we can see their stock absolutely tanked. So look at this. CarMax stock down 24% today, absolutely wrecked. Let's see where they are year to date, down 60%, 5 years down 66%. They still are up 200% from all-time high, but I don't think many people that brought it in 2000 still had it. And it's definitely not looking good in the short term. Let's see if there's any articles on it that we can cover. Okay. CNBC. So CarMax stock falls 24% as CEO steps down and used car retailer releases weak outlook. Well, we've seen what happened. I've done videos recently on the auto loan market. There's huge record amounts of defaults with auto loans. In Australia, we call it car loans. So the auto sector is not doing good. A lot of people, they can't afford to go buy a very expensive car right now. So it says here, it falls during intraday trading Thursday after the used car retailer announced unexpected departure of CEO Bill Nash. And the CarMax said board member David McCreate, a retail clothing executive who has served as CEO of Lulu's Fashion Lounge Holidays, will serve as interim CEO. So things, definitely aren't looking good for CarMax. What is Cowan at? Well, we can go ahead and look that up. Well, they're not doing too good either. So Cowan stock down 6% today. Let's see where they are on the month, down 21%. So year to date, they're still up 45%. But yes, I think with all this news, with all these auto loans, all these auto loan defaults, with the the economy weakening, with these huge amounts of layoffs, people simply aren't going to have money to go out there and buy a brand new car. CEO of CarMax was fired, and movie theater lost $300 million in third quarter. It's definitely not good. I get it, times changed, but movie theaters being phased out is kind of a bummer. Yeah, Blockbuster. Yeah, that's a very nostalgic thing for people that used to go and buy DVDs on a Friday night, get some pizza and watch the movies. It was definitely very good times. But yeah, even me, I used to go to the movies a lot before COVID, but then since after that, I haven't gone much. And I think it's not just the theater, it's because a lot of the films that are created lately aren't very good at all. Chart for Cowan looks ugly. Yeah, it definitely does. Well, everyone, I think that will do for today's stream. We covered a lot of topics. For those of you that have just joined now, you can feel free to replay the stream. I went into a lot of different topics. So thanks for all of you that have joined in the stream. Thanks for all your support. I'll see you all in the next video. Oh, sorry. Shane Greenfield became a member. Thanks for that, Shane. Thanks for your support. And what about Venezuelan-US conflict? Yes, well, that's escalating. The US, said they're going to maybe try to see some oil fields. So that's something I have to do some more research after this as well. Race car, give Mike a big like. Yeah, thanks for that, guys. All right, well, I'll see you all in the next video.